Buuza Kamisona.
We welcome you again to this program of Buuza Kamisona. This week, as I promised you the last time, we are going to continue with the second part of the question of our brother, Mr. Joseph Wasoma from Chileka, who asked the question, what's behind different taxes on one business and how are these taxes calculated? So in our previous week's edition, we talked about the two broad categories of taxes, and we talked about the direct taxes and the indirect taxes. Indirect taxes. So we gave the example of direct taxes here that are directly incurred by the company, like income tax. And under income tax, we gave several examples like pay as you earn, like the personal income tax, and many others. But today, our focus is going to be on the indirect taxes, which we did not discuss last week. And these are also what are called consumption taxes, meaning they are paid by the final consumer. Although the business accounts for these taxes, accounting here we mean the business collects them, remits them to URA, but the business itself does not incur these taxes. And under these taxes, we will discuss VAT or value added tax. We will discuss excise duty. So our focus today is on indirect taxes because last week we dealt with the issue of direct taxes. The indirect taxes are taxes on goods and services paid by the consumers when they purchase these products. And I would like to give an example of a product like soda or water. When you go in a shop, a supermarket, or even a restaurant, and you buy this bottle of water, you will most likely pay 1,000 shillings for this bottle of water. Now, this bottle of water, in it, there will be two indirect taxes that you will pay. One is the value added tax. Two is the local excise duty on this bottle of water. And how are these taxes computed? Now, value added tax is a tax charged at every stage where there is value addition. Let's start with an example of a bottle of water at the point of production. Because there is value addition that comes up with this bottle of water, when it's being sold out of the factory, on the cost of this bottle, there will be added value added tax, which is 18%. Now, the one who buys this bottle of water, to go and sell it, at the point of selling, there is also some value addition. Transportation of this water, and packing it, selling it in your shop. So at the point of selling this water, you'll also charge another VAT. And what is effectively paid to Uganda Revenue Authority at that stage where value has been added will be the value added tax collected at the point of sale minus the value added tax paid at the point of purchase. And the difference is what will be given to Uganda Revenue Authority. For ease of computation, I would like to use easy numbers to follow. Supposing you have an item whose purchase value is 10,000 shillings without VAT. This is cost without VAT, okay? So, at some point X, be it at the factory, be it a wholesale depot, be it at a distribution depot, you are buying a certain item X at 10,000. VAT on this item will be 18%. What is 18% of 10,000? It will be 1,800. Are we together? Now, what is the total cost? So now this is the cost inclusive of VAT. So when you're going to pay for this item at the depot or at the factory, you'll pay 10,000 plus 1,800, which comes to 11,800. Okay? This is what you'll pay. Now, if you compute your cost of sale and purchase, and you establish that for you to sell this item, make some profit and pay the taxes, you establish that your cost of sale before you add VAT is, let's say, 11,000. Okay? So, 18% of 11,000 is going to be the VAT at this level. And this will be 1,980. This is 18,000 of 11,000. And therefore, the cost of this item at this point will be 11,000, which is the cost without VAT, plus this one, 1,980, which makes the cost here 12,980. So, you purchased this item X at 10,000 plus VAT, altogether you paid 11,800. You have costed all your input costs, transport, rent of the premises, and you have said, for me to break even, I need to add another 1,000 on this item. So the cost before VAT becomes 11,000. Now you compute 18% of the 11,000. It gives you a total cost of 12,980. Therefore, what would be payable to Uganda Revenue Authority? VAT payable to URA. The VAT payable will be VAT output minus VAT input, and the difference is what you will pay to Uganda Revenue Authority. What is our VAT output? The VAT you collected at the point of sale, 1,980. What is your VAT input? The VAT you paid at the point of purchase, 1,800. So, what is your payable VAT? 180. Very basic and simple to demonstrate how VAT is paid. VAT is not the entire 18% charge, because the entire 18% charge would have been 1,980. But because VAT is a consumer tax paid by the final consumer, what you give to URA is 180 shillings. What you paid at the point of purchase must be first recovered from what you collected at the point of sale. Now, this looks a complicated thing to calculate, even as much as I've tried to use a basic example. But technology can solve all this for you. You don't have to do this calculation on your own. So, for people who are using technology called IFRS, you will just do your selling and your purchases, stock them in IFRS, and at the point of making your return, I forgot to mention that VAT is paid on a monthly basis. Every month, you file a return covering sales of the previous month before the 15th of the following month. So we are now in June. Before the 15th of June, all traders registered for VAT will have to file a return and pay the VAT they collected in the month of May. So it is paid after 1 month before the 15th of the following month. Now, if you have that technology called IFRS and you're using it in your business, you will just click a button and that button will ask, are you ready to file your return to URI? And you will say yes. For due diligence, you scrutinize all the captured sales and purchases. Once you agree that they are complete, you press the button, it will compute for you the entire VAT payable and you will submit your return. So that is it for VAT. And again, I should mention that VAT is paid by only those businesses that are registered for VAT. And one of the requirements for registering for VAT is that your turnover should be above 150 million per annum. So if it's a small business with a turnover below 150 million, you do not have to collect VAT. So Joseph, this is an example of an indirect tax. Yes, it is paid by the business, but it's not incurred by the business. It is incurred by the final consumer. I thank you very much. I wish you a very happy Matters Day tomorrow. I wish all our taxpayers a very successful month of June. It is the last month of our financial year. We expect all those businesses to diligently and timely file their income tax returns and pay their income tax as well as the other taxes payable in this month of June, so that together we can develop our country, Uganda. Thank you very much and God bless you.
Buuza Kamisona.